Good afternoon to one and all present here. Today, as part of the fourth campus interaction of the Podium, it fills me with a great sense of pride to inform you that we have with us Mr. Rajnish Kumar, the Chief General Manager of State Bank of India. State Bank of India is the largest banking and financial services company in India by revenue, assets and market capitalization. It is a state-owned corporation with its headquarters in Mumbai, Maharashtra. As of March 2012, it has assets of US $360 billion with over 13,577 outlets, including 157 overseas branches and agents globally. SBI is a regional banking behemoth and it is one of the largest financial institutions in the world. It has a market share among Indian commercial banks of about 20% in deposits and loans. The State Bank of India is the 29th most reputed company in the world, according to Forbes. Also, SBI is the only bank featured in the coveted Top 10 Brands of India in an annual survey conducted by Brand Finance and the Economic Times in 2010. With such an extensive network and its ubiquitous presence, SBI is truly the banker to every Indian. Representing this great institution, we have with us today Mr. Rajnish Kumar, the CGM of SBI. Mr. Kumar joined SBI as the Probationary Officer in 1980, and since then, he has served in different places like New Delhi and Maharashtra. He was also the Deputy General Manager and General Manager NW2 in Pune. Mr. Kumar was posted as the Regional Head of SBI in London, heading the bank's UK operations prior to taking up his current position as the CGM of the Northeast Circle headquartered in Guwahati. Sir, may I now hand over the stage to you to engage the audience in an interactive and an engrossing session.
Good afternoon, friends. I'm really delighted to be here amongst what we call the brightest of the students who have been able to make to prestigious institution like IIM. I think it is a dream for anyone who is a student to join IIM, and you people are lucky that you are in this coveted club. When I joined the bank, we did not know much about IIMs at that time. In 1980, it was either the Indian Administrative Service, and if you don't make it to Indian Administrative Service, join State Bank of India as a probationary officer. So that was the scenario for the career at that point of time. And things have changed tremendously. I didn't have a chance to have a look at your curriculum, and I don't know how much do they cover about banking. But what I thought that because now you are on the threshold of career, and you will be finishing your studies in 1 year or 2 years. So I will give you a brief overview of the banking developments, past, present, and future. So maybe some of the information you already have, because nowadays anything you want to know, so Google is there. So if you want to know anything about banking, and I'm sure my friend who was talking about the State Bank of India, only today he would have researched. It is like Google is such a powerful tool that whenever we have to look for any answer or any question, that is the first thing which comes to mind, and it is amazing. So giving a brief perspective of evolution of modern Indian banking and the state bank's role in 1806, which is now more than 200 years, Bank of Bengal, it was established in Calcutta. And today what we are successful with. After that, Bank of Madras and Bank of Bombay. These three banks were established. They were called presidency banks. And till 1921, this banking scenario was dominated by these three banks. And in 1921, all the presidency banks were merged and Imperial Bank of India, it was formed. Till 1935, Imperial Bank of India was not only a commercial bank, it was performing functions which are performed by a central bank. I'm sure that this group of people would understand the difference between the functions of a central bank and the functions of a commercial bank. That you might have studied in your class. But Reserve Bank of India, which is the central bank in the country and which is the regulator, it came into existence only in 1935. So Imperial Bank of India was not only the normal commercial bank, but it was a central bank also in India. And after independence, in 1955, 1st July 1955, the State Bank of India was created under an Act of Parliament. It was based on the recommendations of All India Rural Credit Service, All India Credit Rural Survey Committee under Professor Dhantiwala, and there was a thinking that the banks at that time, they were just catering to the need of the businesses or trade. In as much as that there was a time that if you are a holder of a checkbook of Imperial Bank of India, you are the privileged one in the town. You couldn't get a checkbook of Imperial Bank of India so easily. So it was a sort of a class banking with different objectives, but the need of the country for development were different, and that's why the Rural Credit Survey Committee was appointed, and based on the recommendation, the State Bank of India was created, and its main purpose was not only commercial banking, but play a critical role in the development of the rural banking or rural economy of India. So another landmark was there in 1969, and 20 banks were nationalized. I think 20 banks were nationalized. Prior to that, all these banks were the business houses, and again it was felt that they were serving the needs of the business houses in the country and not of the common man. So that was another, I would say, a watershed year in the history of banking in India. Then 1980, another 6 banks were nationalized. Then the real, I would say, the real landmark here is 91-92, when the economic reforms were initiated and the banking sector was opened up along with the private sector banks. They started coming in only after 1992, and there was a paradigm shift after 1992 in the thinking as well as working of the banks. As I said that I joined the bank in 1980, and there were no computers at that time. Everything was done manually. We had huge branches where balancing of books used to take months together. Balancing the transactions was not an easy task. We had ledgers which were so heavy that it was impossible to lift them. And everything was done manually. And to give you an idea, when I joined the bank, we were 250,000 employees in the bank in 1980. In 2010, when bank's balance sheet has grown maybe 20 times, we are 215,000. So, in the last 30 years, there has been a phenomenal change in the Indian bank. What happened in after 1992 liberalization? There was a committee called Narasimhan Committee. Narasimhan was Governor of Reserve Bank of India, and he prepared the roadmap for the liberalization of Indian banking. And very significant banking sector reforms were initiated after that. Just to again give you an idea, because you students authorization was required if you wanted to lend more than 10 lakh rupees, and later on it was raised to 1 crore rupees. There was very tight lending norms, and everything was in short supply before 1992. This generation of people who are sitting here, they have not seen the economy of shortages which we have seen. Everything, including money. It was in short supply, not anymore. So, what happened that when the ICICI Bank, HDFC Bank, or a bank set up by UTI, IGBI Bank, so with the advent of private sector banks, and they started having their foothold in the market, so there was a what we call a paradigm shift in banking. Consumer banking and consumerism started taking precedence. Just to again give you an idea, in 1996, a commercial bank would never give you a loan for a car or a house. No, it was a no-no. Only for the staff members there used to be a housing loan scheme, but nothing of the sort which what you see today. What happened, because there was the competition was so in the market, so banks started investing into technology and the productivity and efficiency of the banking system. That started receiving attention, and it goes to the credit of public sector banks in India that they have responded very well to the competition from the private sector banks. There are not many industries where public sector has been able to withstand the onslaught of the private players. Be it airlines, be it hotels, any industry you take, if private sector has come in, it has been impossible for the public sector undertakings to survive and meet the competition. But public sector banks, they have been able to hold their court. And today, 70% of banking assets in India are held by public sector banks. The kind of reach which we see today, it would have not been possible if the banks were not in public sector. Who would open a branch in places like Anini if it was not a public sector bank? You can't expect a private sector bank to open a branch in Anini. That is one example. I belong to UP, and in 1996 or 97, it was decided by the government of India that we will open a Indo-Tibetan train. And there was a, what I call a government diktat, that the State Bank of India has to open a branch in Gunji, which is on Indo-Tibetan border. And that branch, it is inaccessible for 6 months, and for another 6 months it operates out of the military camp. So, I think public sector banks have done a great job, and there are of course certain negatives associated with public sector banks. Is more about efficiency or wastage of resources, or there was a time when our response to the customer or our staff, it was not responsive to the customer needs. The technology, the bank started investing very late, and if it was not for the private sector banks, and if it was not for the competition, probably the investment in technology would not have been, would have not taken place the way it has taken place after the year 2000. So even like just to again give you an idea about the role of technology. So now, like after giving you an idea about how the things have developed in the last 40-50 years. So what is the scenario present? Scenario present is that all banks, all public sector banks, they don't know core banking platform. You understand core banking platform? What is core banking platform? Yeah. And all banks are interlinked. So just imagine that in the last 10 years, how much effort has gone into creating this network. The first computerization started taking place in 1988 or 89. And then all the branches were done on a standalone basis. So computerization had taken place at many branches. but not on this scale. Only branches in urban areas and some semi-urban areas were computerized, and these systems were run on a standalone basis. Even the first ATM, when it came in 94 or 95, they all were a standalone basis. It will only, you have to go to that particular branch where you have the account and there is an ATM, and you can do transactions there. So, in State Bank, around 2002, it started the project called Universal Computerization, where like it was decided that each and every branch, wherever it is, it will be computerized. Again, you can imagine how massive the task was, because computers had to be transported, network had to be established, technology was required, and I don't know, many of you might have seen, there were pictures in one of the newspapers where computers were being transported on the mule back, computers were transported in the boat, and every possible, even what do we call, on the head, you know, the pulley, taking the computer on the head. So, this was this has been a very interesting journey, I would say, of computerization of the banks. And today, now you have almost 100,000 branches of the banks, commercial banks in India, and all of them run on a core banking platform. We have 100,000 ATMs. They all are network. We share database amongst each other. You don't have to be a customer of a particular bank to operate on. You can now operate on any ATM with your card. Internet banking was introduced only after 2000. Latest thing is mobile banking. So these are what we call alternate channels, and it has been possible only because of the investment in technology, and banking technology has moved very. It has made a lot of advancements, and now to give you an idea, about 35% of the transactions in the State Bank of India, they happen on what we call alternate channels, which are ATM, mobile banking, and so talking about a little bit about like banks role in what we call, which is a very again a topic for discussion and contemporary topic, is about financial inclusion. So financial inclusion means essentially that we provide banking services, what we call the last mile, or each and every village of the country having a population of 1,000 people. Right now, the banks are covered 5,000 people. In another, like 1 year or 2 years, the task is to further expand the reach. And again, it is because of technology that it has been possible. Today, it is not really necessary that we open a branch. So we are using what we call business correspondent model, where there are many organizations. Some of them are non-profit organizations. They take our franchise, we provide them the platform, technology, but it is amazing when many literate people, they come and they are able to do their transactions on those, what we call customer service points, which are not essentially bank run, but a franchise, so we can call it a franchisee model, and that is changing the life of villagers in many areas. Like Northeast is still, it has not developed as much. But many live examples are in the state of Maharashtra and Gujarat. Entire, what you call supply chain, that is a term which you would easily address. So the entire supply chain, say for example, milk. So the way it works is that bank has financed the processing plant, which is owned by the multinational. Then there are collection centers, or we call chiller plant, which is an intermediary, that is financed by the bank. And there are milk producers who own 4 cattle, 6 cattle, and mostly women. They have been financed by the bank. And when they supply milk, So they have been all given a smart card, and everything is available on computers. And chiller plant also, they are having a kiosk for computers. And whenever the payment is made, so the chiller plant deducts the payment and gives it to the bank towards recovery of loan. And so just imagine that how critical role bank plays in this supply chain, where milk is produced in a village in Maharashtra and the end consumer is sitting in USA or UK. Because whatever this processing plant does, manufacturing cheese or milk products, and they all go to McDonald's or this cafe coffee day or so. The idea of giving this example to you is that banking can play a very, very critical role in the development of the through financing of what we call the supply chain, because credit is a critical input in the supply chain, and bank provides that critical input. And if that model is adopted across the country, where the possibilities are immense. So, and again, that has all been possible because of technology. That makes the task much easier, and the cost per transaction has come down. Otherwise, we in a state bank alone would have needed 1 million people or more if we were still on the manual system as we were in the 1980s. And coming about like a little bit about what is happening or going to happen in the future. So one thing is certain, that the consumer banking, this is the future, because if we look at the developed world, or what we call is the developed economies of the world, so it is all driven by consumer and investment banking internationally. India is yet to reach that stage. But because the middle class is growing and what we call HNIs, high net worth individuals, are growing, so the scope for consumer banking and investment banking is bound to grow in India, and that is how the future is going to unfold. The banking sector will definitely grow as the economy grows, because it is some sort of an alter ego of the economy. If economy does well, banking system will do well. If economy does not do well, banking system will not do well. And we are still like far behind what the per capita is across the world. We have not even reached the what we call a mid-level of development. It's a very like fashionable, and there's a emerging market economy or developing economy. The fact of the matter is that we are still a poor country. That is, once you go out and see, then one realizes how much is the difference between the standard of living of the people and the level of development which has taken place. So this sector is bound to grow, and the opportunities are growing. In banking sector, banking does not necessarily mean taking deposits and lending money, as I said, and particularly, of course, for people like you who are doing your MBA and all that. So investment banking holds the maximum attraction, but unfortunately, internationally, that model is now coming under a big challenge. Again, I don't know, many of you would have heard of 2008 financial crisis, where Lehman Brothers, which was the largest investment bank of the SA, and it collapsed because of what is called subprime crisis in US markets. And now, because I was having state bank's operations in UK, and I got posted around that time only. So I was witnessing how much turmoil the international markets at the moment are under. One crisis after another is coming to the. They have not been able to come out of that crisis. The latest crisis to hit them is about LIBOR fixing scandal. And there is a more demand for more regulation, tightening of rules. And really it is very difficult to say there is a clamor for that commercial banking or normal banking should be separated from investment banking. So investment banking at the moment has come under a bit of a cloud, particularly in the developed world because of the excesses of the system, and sometimes like now even there is a talk about now comparisons have started coming like whether the banking model of India is a superior model, where the government banks and private banks, they coexist, so there is a competition in the market, and at the same time, because largely the ownership of the banking is with the government, so the banks are not entirely driven by the what we call is the return to the shareholders. Because if quarter after quarter you are under pressure to perform and there is a shareholders expectation, so the chances for any excesses are inbuilt in that system. So there is a certain amount of greed, and which has led to this situation in the international markets. So I think these are some of the thoughts which I wanted to put before you. But I think during the interactions, I would be more than willing to answer whatever questions you have. I should be able to answer most of them. But if I am not, then we will take a detailed interest most of our response. So thank you. That covers pretty much.
We'll just open the audience for questions. Good afternoon, sir. I'm a second-year participant here. Recently, we heard about the possible downgrade of S&P of Indian, and also it has downgraded some of the bonds of SBI also. I want to know what is the effect of this downgrade? How will it affect your bank and India as a whole?
So what is about like S&P downgrade? It was done in a. You can hear me? Yes. So it was in the specific context of capital adequacy of State Bank of India. And the way our capital is structured, so there is something called subordinated debt, which is treated as part of a sort of a quasi-capital. So that rating was specifically to that, but those particular instruments. The State Bank's overall rating was not downgraded. But to answer your question, any rating downgrade, what it does is that it affects your profitability, particularly in the international markets. Because rating is one of the criteria which any lender would use. Even if the State Bank of India, if I have to lend money to someone, I will use their, what is the rating of that firm. So when any downgrade takes place, it simply means that your cost of borrowing in the international markets can go up. It will necessarily go up, no. It does not have just sort of a direct, what we call positive correlation. But the chances are that your cost of borrowing will go up. How much, how many basis points, this again depends upon what is the liquidity in the international market. And people have now started to make their own judgments. They won't entirely depend upon the rating agencies. Does that answer your question? Yes, sir.
Hello, sir. I'm a second-year student. Sir, we know that SBI has been very successful in the retail segment, almost controlling the entire Indian market. So, how do you see SBI being a state government, as in the public sector bank, not been able to evolve as a very good player in the investment banking segment. As in, if you see Citibank or the foreign players, Morgan Stanley, they have come here lately, but the kind of presence and business they are getting from HNIs is huge. So, do you think being a government player stops you from being good at IB?
It does not, because I think it is not. If I put it here. As far as the State Bank of India is concerned, if you look at its activities, it is of course in normal commercial banking, it is in retail banking, it's merchant banking arm, SBI Capital Markets. It is the largest and one of the most successful merchant banking arm. If you take the life insurance, so SBI Life, after Life Insurance Corporation of India, it is one of the most successful life insurance. So in the State Bank of India, at least we have that faith that once we decide to do something, we are capable of doing it and doing it successfully. But investment banking is definitely a different ballgame, and it has not developed as much in India as a whole. And it depends upon the regulation also. The regulatory environment which was prevailing in USA or UK, it is very, very conducive to investment banking. The laws relating to securitization, the laws relating to private wealth management, they all are, they are very market friendly. But the availability of instruments and the availability of laws, there is also a sort of a limiting factor. But as I say, that as the HNIs and middle income group, as that class grows in India, the demand for these type for investment products will grow, and there will be a need of what we call it private banking or wealth management. So on a very limited scale, State Bank is doing what we call financial planning, but nothing of the sort which can be said to be a real wealth management. It needs, again, I think a partner who knows that job. And I think when bank feels that the right time has come, the examples you gave, HSBC or Citibank or Standard Chartered Bank, so they all come from developed world, and they have the experience from their back home experience. Whereas like SBI, again, ultimately we are a bank from a developing world, what we call an emerging market economy. So that difference is there and will remain there for some time. But it is not something which cannot be done. But I think the market size needs to grow, and maybe some changes in the regulatory and legal framework would be required, where there are more products are available and there is a scope for innovation. But the financial crisis of 2008, and which is still going on. So as I said in my talk, there is a little bit of caution and conservatism across the world, not only India. Now India, like regulators will say that we were very wise, that we didn't allow this type of situation to develop by keeping tight reins over banks, but it requires a certain amount of freedom and encouragement to innovate. The kind of financial products that are available in UK, USA or Switzerland or any other developing, we are still not there. But the time will come, and you need people like you.
Good afternoon, sir. Sir, I'm a first year participant. So my question is regarding the non-performing assets and the concept of the asset reconstruction companies that have come up with this concept. So I was reading an article in the newspaper that there has been some discontent between the banks and the asset reconstruction companies regarding the procedure or the recovery of these non-performing assets. So as a banker, how do you perceive this idea of these asset reconstruction companies? Okay.
Right. So you're talking more like a journalist. Non-performing assets, of course, it is a problem for the banking system. And again, I will give you a little bit of historical perspective. There is nothing like non-performing loan till 1988 or 89. So everything was performed. You know, in 88, first time in the country, norms were introduced, what is called income recognition and asset classification. So, a non-performing loan is when you are not receiving your interest or principal within 90 days. So, as far as non-performing loan is concerned, the reasons can be several. It's not that. One is, of course, if the economy is growing, then the chances of NPA would be. If interest rates are low, there will be less NPA. We have seen a period when in 2000 and 2001, the NPAs of the banking system were as high as 10%. I am talking about gross NPA. And then it went down to as low as 2%. And now it is hovering around 4 to 5%. There is in this country, of course, like because we are owned by the government and this is one of the sort of, we can call it a negative point where there is a directed lending towards agriculture or SME. So NPAs essentially arise when one is that you don't want to pay despite having income, and it could be that you want to pay but you don't have the income. So in India, agriculture and SME, the problem is that the available surplus for servicing the loans is always very, very doubtful and volatile. And unfortunately, coupled with the high interest rate, which is now at the moment 12% and above, so we are seeing the stress on the system, what we call the asset quality has deteriorated on account of that. When the interest rates were 5 and 6% just 4-5 years back, as I said, that the NPAs were very high. So whenever there is a very high interest rate, because who can service interest 14-15%, it's very difficult in a business to generate that kind of return. But Reserve Bank of India has its own issues because of inflation and overheating of the economy. So interest rates are currently quite high. So that is one factor which is contributing. In agriculture, of course, it is so much still dependent upon nature, and there is a subsistence. We call it a subsistence level of agriculture in this country. Very disorganized, farmer, whatever he produces, he has to consume it for him and his family. So the income is just not there to service the loan. And the second part of your question about asset reconstruction companies, it is a like I think a good concept, and the only issue which can come up is about the price discovery. So most of the problems between the banks and the asset recovery companies would come on the price discovery of a distressed asset. As a banker, we would like to get a maximum value, and as a businessman or as a, like, they would like that we sell the asset at a very, very low price. So I think other than that, this is not much of an issue. And for some time, business for them was not good because NPAs were low. But now I think the business cycle is in their favor. Although we would never like asset reconstruction companies to flourish because we want our NPAs to be low and recover them ourselves.
Good afternoon, sir. Chandan Gupta, second year participant. So my question is regarding banking correspondence or business correspondence that we just discussed. So as we know that most of the agencies who are acting as banking correspondents to banks, like Reliance Financial Services to SBI or Aditya Birla Financial Services, so they have more of strategic interest rather than financial interest in these agencies, in terms of the expertise that they will develop in the rural areas, in the banking sector. So how do you see these agencies, take example Reliance or Aditya Birla, who are ready to enter into banking segment as a potential threat or competition to established banks like SBI? And so second question, as far as we know that proposed guidelines of RBI, the whole nation will be divided into 20 clusters. In each cluster will be given to a particular bank, where only a single business correspondent will act. So do you think we are on the way to develop a monopoly of BCs in a country like India in the rural market?
Right. So what is that? I am not aware whether Reliance Financial or Aditya Birla, they would be our business correspondents. So But nothing prevents it, right? Initially when the Reserve Bank of India guidelines came on financial inclusion, it was that only non-profit organizations can be business correspondents, but later on those guidelines were relaxed. So what happens that many times for the banks, opening what we call a brick and mortar branch is not a viable option. Because when we open a branch, at least we need 5-6 people to manage. And the costs are relatively high. So I think if we have to get what we call this last mile reach or connectivity, so it is a good business model. And there are many organizations which are, some of them profit driven and some of them are just simply NGOs, or some have a very vast rural presence like ITC Chopal, you would have heard. They have a deep penetration into rural markets. So anybody can be business correspondents, which meet a certain criteria, because when we are giving a franchise, we are also taking a certain amount of risk because our reputation is at stake, and these are the financial transactions. So unless the business correspondent is we would not appoint them as a business correspondent, but that there is no competition between the business correspondent and the bank. Now, coming to your second question about like dividing the whole country into a cluster or this thing. So the basic thought which Finance Ministry had, it is not an idea mooted by the Reserve Bank or the bank, but this is something which has come from the Finance Ministry, and they are our owners. So sometimes they can also decide how do they want to run the state of affairs by virtue of being owners. The idea is that the number of transactions which a business correspondent handles, unless we increase that, they will not be viable. So it is coming more from the viability of those business correspondents that they can handle transactions from any, so which will give them more volume and improve their profitability. But it is not to like kill the competition or anything. But that is yet to happen. That is still.
Hello, sir. Congratulating SBI for the brilliant turnaround. So my question is, we normally study that when a company tries to be everything to everyone, it normally shows a lack of strategy. It's a flawed position, and it normally leads to a kind of competitive convergence where every company is a kind of replica of the other. Your comments on the banking industry in India, and especially how differentiated SBI is with this era. And secondly, sir, whenever I study or read about SBI, people normally say the reach into rural areas, the development schemes it covers as their kind of first liners for SBI. So why not concentrate on the second and third tiers rather than going so hard in the retail area? So thank you so much.
No, as I said that the very objective, our origin is State Bank of India. So we have a certain social obligation which we cannot deny. So State Bank of India, because it was established for development of rural India, that was the basic objective. So that's why we have spread so much. We are thinly spread that I know. If we were not as thinly spread, we would be more profitable also. So we don't have much choice as far as that is concerned. And to answer your question, like trying to do everything, but the way State Bank has evolved, because it was the premier banking institution in the country. So whenever something new starts happening, even everybody looks at the State Bank of India to set it. So what has happened that when merchant banking activities started in 1984 or 85, we were the first to establish merchant banking service. When the mutual fund industry started coming in, we were the first to establish mutual fund company to enter the equity market. So one is, of course, it's a very diversified model, and there is a conscious strategy to be present in each and every market segment. But the way the organization is structured, so we have various verticals. There is a what we call rural banking vertical. There is a SME vertical. There is a mid corporate vertical. We have a corporate accounts group which takes care of large corporates. So bank has the verticals and it has created capability in those verticals to handle different kind of market and business segment. And this type of verticals started coming in 1995 onwards. So on one way you are correct that why do everything, but on the other hand, if you see, it is quite amazing that the State Bank can lend as low as 1,000 rupees and it can lend as high as 10,000 rupees. So that kind of capability exists in this organization, and that in a way is unique to a State Bank. But because there are so many responsibilities cast on the State Bank of India, so it is very difficult for us to say we will not do corporate banking, we will not do international banking, we will not do retail banking. Everyone has a need, and by virtue of size and presence, no other bank is in a position to fulfill that.
Good afternoon, sir. Banking business is mainly driven by people's financial needs. So, but with the evolution of banking over the years, with the technology, internet banking, ATMs, etc., the personal contact of the people with the banks is getting reduced. So, how do you think this gap is addressed, and don't you think the technology is reducing the relationship factor which banks had earlier compared to the business which is handling at present?
Right. So, I think you are partially correct. When it comes to transaction banking, so for transaction banking, yes, there is really no need for an interaction or interface between the customer and the bank. Ideally, that is the ideal situation for us also. You know, we would not like to see crowd in our branches. We would like to see them using ATMs or internet or now cash deposit machines, self-service kiosks, because transaction banking interface is not required in today's time. But for what we call value-added service, there is no choice but to have an interface with the bank. If you want a loan, you can't do it on the internet. You will have to be, at least in India, there are countries like UK where you can get a mortgage. But the systems are such that one can take a mortgage in UK or USA without going to a bank branch. But in India, still we are far away from that situation. So then there will definitely be a need for an interface between the bank people and the public. Only thing it will not be and should not be for the simple transactions. So for any loan or any advisory or any, like where to put money, whether to put in fixed deposit 5 years, or want to put it in 1 year, or want to put in a green deposit. So there is it. And even like when the internet banking and online banking came, and you would have heard the name of ING Bank, and it established the first bank which was just online. You were not allowed to go to there, they did not have a branch. It was just online banking. And people thought that the brick and mortar banking, so they would be an example of brick and mortar banking. But that did not happen. And again, there is a felt need and there is a feeling that brick and mortar banking is bound to remain here. It will coexist with the what we call alternate channels. But the interface between the banker and the customer, that will be required, but maybe not for transactions.
Good afternoon, sir. This is Ashok. I'm a first year student. Considering the current banking model of India, are there any downsides for a bank to make a more global presence? If there are no downsides, why hasn't SBI or for any other bank for that matter has not gone globally on par with Barclays or Standard Chartered?
You know, as far as international business is concerned, so one is the examples which you are giving, they all come from the development. Whenever you are trying to expand your international business, you need a client. It is because Citibank or a Standard or a HSBC, they were coming from a developed banking countries where the banking was developed. So they had something to offer the Indian. Now, what does the Indian banks do in those markets? Obviously, in consumer banking, we can't do it. There has to be a need for it. So, because banking was not that developed in India, particularly the consumer banking part, so there was a wide market available for a city or a Standard HSBC to come in and fill that gap. Because they were 20-30 years ahead of us in terms of technology, availability of products, and the quality of customer service as well. And so I can't do a reverse, that is State Bank of India goes and starts selling products to retail products, particularly to customers in the USA. But wherever we go, international presence, what we look at is what is the non-resident Indian population. So because they still prefer to deal with the bank from India because there is an emotional bonding and we understand each other quite well. Or wherever there is a corporate interest. So say for example, Tata, they have a big presence in UK. So we have also grown quite big in last 10 years in UK. Because if a corporate from India, even if you take example of Japanese bank, you would have not heard of any Japanese bank operating in India in consumer banking space. But they are very strong with the Japanese corporates. If it is a Hitachi or it is a Sony or this thing, so their preferred banker would be a Japanese bank. So similarly for an Indian corporate, their preferred bank would be an Indian bank. And what we have to also realize is that India's credit rating was poor, it was not as good. And when you are operating in international markets, you need to have a good credit rating. Only then your cost of borrowing or raising funds will be less. What happens that many a times, if you are a BBB rated country or a BBB rated bank or AA, so you can't lend money to a corporate which has higher rating than. There is no scope for any intermediation. Intermediation will always happen when the bank's rating is higher than the person who you want to lend. It cannot happen. So for a bank like State Bank of India, I can't lend money to Vodafone because their cost of borrowing funds is much less. But if I want and go and start lending money to someone who has credit rating lower than me, then we have another problem of NPA in our international board and recovery. So there are a lot of limiting factors. And but the way regulation is changing after the recent times and this thing, I doubt whether many international banks will have to operating across all the geographies. Scenario is going to be tougher. But you need raw materials. If for banking, our raw material is environment and Indian. So wherever they are present, we are present.
Good afternoon, sir. I am Vilkesh Patra, second year student. So the question is related to the Basel III norms. As the Basel III norms are already in place and it has to be implemented by the public sector and private sector banks. So what is the State Bank of India's preparedness for this Basel III norms?
Basel III norms have been finalized, but there is a timetable for implementing those. And as far as the State Bank is concerned, or any bank in India which is operating in international markets, so there is no choice. You have to comply with that. And it is, of course, it has been phased out because the main and the most critical issue is about the capital adequacy issue. So the norms are much more stringent. And the State Bank of India being a State Bank of India where 60% of the ownership is with the government. So definitely going forward, the challenge lies in that how much money government can put in the public sector banks and capitalize them. But as on date, our capital adequacy ratios are much better than many banks in the world. We are not as highly leveraged as many banks in the UK, USA or Germany or France are. So I think the problem will be more for them rather than us. But Basel III is just not capital adequacy. There are certain other issues with regard to risk management and measurement of risk, which will require a lot of groundwork to be done to make the system which has the capability to measure the various risks. But there is like 6-7 years time frame for that. So that will be implemented. I mean, there is no choice, at least for state bank. If it is a domestic bank not present for international banking, RBI may come out with a different prescription, but not for it.
Good afternoon, sir. I'm Ankit, second year participant. Sir, with respect to the current economic scenario, RBI coming out with rate cuts, but somehow it's not being leveraged completely by banks, private banks. There are instances when RBI has come out with rate cuts, banks are delaying those cuts. Even with respect to CRR cut, banks are not giving, loans as frequently as they should have given, considering the RBI. So how do you foresee the role of commercial banks in this economic recovery process, considering this new trend?
But RBI has not implemented. There is a demand from the industry and the banks that we should bring down the rates of interest. But it has not happened so far. And I was reading the general opinion. On 31st July, when RBI comes out with the latest monetary policy, there is very little scope for RBI to use the rate of interest or even start. So RBI is very concerned about the inflation in the inflation is very high. Unless inflation comes under control, RBI's capability to reduce the interest rate and pursue a policy of what we call monetary expansion. I don't foresee that is happening soon. But if RBI cuts the rate, it does get transmitted by the what we call indicates by.
Recently, there was some instance. SBI actually came out with rate cut, expecting RBI will cut, but that doesn't happen. So, how was it that it's getting separated? RBI and commercial bank doing on different planes?
There is it's not necessary that they move always in what we call prime rate or base rate. SBI did not cut, but there were certain what we call margins. So, bank felt that they were excessive, and some good business was going on. So that was more to do with the commercial business. Good customers, because customers feel that rates are not competitive. So the idea about bringing down the spreads was to be competitive in the market and does not change prime risk. We might hear raising the range.
I'm Ankit from second participant. So I want to ask about this RBI is going to issue new banking licenses for private players. So how it is going to affect the competitiveness of the banking industry as a whole? And players like Reliance and Birla are going to grab these licenses. So is there any possibility of conflict of interest between their original business and the new banking business?
That is always an issue. Whenever, and that's why RBI has not been very enthusiastic in giving licenses to the private industrial businesses houses, because that danger of conflict of interest of how to draw a Chinese wall, that is always a very, very big issue. But it's not that that problem cannot be tackled. There are ways, means and regulation to do that. And as far as competition is concerned, it's always good for the market when there is a competition. But also, and there's a and as far as if Reliance comes, so the more competition would be for the foreign banks and the already established private sector. The public sector banks, they operate in a very different space and demand. For a Reliance or a Birla or any bank for that matter, to have the kind got the services which public sector banks offer and the kind of management. So I doubt, as far as public sector banks, I don't think there's going to be any. For the last 15 years, for the ICICI or HDFC or Axis Bank, the dominant position of the public sector banks has not been effective. But yes, there is a certain what we call a premium segment of the market where definitely there is some loss of but they are very focused on a certain type, not the type of
Good afternoon, sir. My name is Arpit. I am a second year participant here. So, as we talk of financial inclusion, in the recent years, we have seen the advent of, apart from business correspondence, M-commerce platforms and services. So, where the telecom companies partner with banking, commercial banks and provide transactions. So, according to you, what role do you see of these platforms and services in financial inclusion? And secondly, what kind of improvement in service can they bring, quality of service of banking and transaction can these platforms bring along? Thank you.
Right. So as far as M-commerce is concerned, I think it is a very, very powerful tool which is now available. But it can only perform remittance function. If you are remitting money from one account to another, then you can do it using your phone. And the way it should have grown does not yet grown in India. Because there are, I think, almost 900 million mobile phones currently. But the mobile banking is yet to really, it is more developed in countries like Africa. Here it has taken off. So I think we definitely need to popularize this product. And if there are any technological needs, because of course banks and telecom companies, they have to work very closely together and make the product more popular and convenient. But it's a very, very, very powerful tool, particularly for people who are at the lower end of the standard. So for them it can be particularly for migrant labor. Everybody has a mobile and mobile use it without going to a bank for you cannot internets or use the internet. But I think M-commerce is likely to grow manifold. So finally you get it.
I'm Sweetiti, a first year participant. My question is again regarding the financial inclusion only. Sir, apart from this mobile technology and business correspondent model, I feel that when financial inclusion is this important for a developing country like India, and it is in its nascent stage, don't you think that something is going fundamentally wrong about the kind of products being offered? What is the central guiding line for this kind of venture is the penetration regarding the number of accounts being opened. But in my opinion, the bank should also take into consideration the number of dormant accounts that are being opened in this case. And when this is the case, if the product is not viable for your target customer, how is this kind of model going to be sustained? And when this is the right time at the nascent stage, why the public sector banks are not doing anything to redesign the products?
So, to answer your question, one is that whenever you take a stand, what you have to understand is that the priority for the banks was to bring the people who are not involved and generalize their savings. And opening of their basic account, that is the first thing. So, first they should have a banking capital has to be. Otherwise, what do these people do? but the basic lack of availability of the savings. So the first ones which are and the utility of those accounts actively considering where all the payments which are received from central and state government, they will go to the banking check. Right now, there is a cash payment and there are some leakages and those kind of things. So, huge amount of government pays by the various systems. So, that will start going to the banking system. So, that itself will make these accounts viable and attractive. Another is these accounts mostly particularly for the migrant people. They are used for remittances from one place to another. Then micro insurance products are offered on these accounts. And the other type right now, lending products of those banks are not expensive for obvious reasons. Because the income level is so low that we have to see many of those loans being given. But first idea is to bring them into the habit of banking to an institute. I think there is some sort of a not the correct information. The way it works is that banking correspondent, they have a place, right? What is called customer service point. So they are established, and it's not necessary that they just do this business. They can do other business also and run a customer service point. And I have visited a lot of companies myself, and there are sometimes long queues, even there, where like many literate ladies or many literate people, they come and we have provided them biometric device, even if they can't sign. Rather, even if they can sign, it still works on the thumb impression, the biometric devices. In fact, now the talk is that even all ATMs they should be on biometric, we are just with the finger. But the task is enormous in India. The volume, the number of people, it is so huge that it will take years before you reach a certain level of development. It is just the beginning, just years. But there is like 50-60 crore people in this country who are looking forward to that. And financial inclusion is not the panacea for everything. Having a bank account does not resolve that they will, their poverty will be. And to answer your question about like multiple agencies, so till such time the infrastructure is there. Moving the money across the system is not a problem. Whatever department, whether it is central government, state government, whoever wants to use the banking system and transfer the money, that connectivity is available, means are available. Yes, those departments themselves have to computerize and improve their systems. As far as banks are concerned, there is no issue. You can be an electronic bank. The State Bank of India, how does our salary is paid? There was a time when it was paid at the branch level. Each branch was preparing the salary. Now 215,000 employees get paid from central institutions across the country. So, like moving money across millions of accounts can be done now today with a click of it. But the remitter, the person, the department which has to remit the money, they should be payment. Obviously, they cannot give me an annual list and I will do manual list. That is not possible. I can't do that. But if we want to make millions of payments, we can make millions of payments. Because they have to just give us an electronic file for uploading. Yes?
What are the advantages associated with home branch concept? Like, why is it still existing? And if at all a bank, like if, as far as my knowledge is concerned, none of the banks have done away with the concept of home branch. Why? What are the challenges if one thinks of doing away with that concept? What are the challenges involved? And do you see it as doing away with the home branch concept? Will it provide a competitive edge to your bank?
No, we can't do it with the... Somebody has to do it. When you open a bank account, somebody has to do it. So who is that somebody who will do it?
The first point of contact will be the home branch, but then after that, like the transactions and everything.
You can do anything.
So, but then there are certain specific.
We have to ask some what we call home branch. The concept of home branch is who has done what we call KYC.
Right.
So the branch manager of that home branch, he says that so and so yes. And you need a reference point. So I think that concept cannot be shadowed, but as far as transaction is concerned, you can do anything. But home branch concept is different. Yeah. Home branch concept cannot be.
Sir, my question is regarding the provisioning policy of SBI whenever a new chairman comes in. Whatever the mandatory disclosures are being made, the provisioning is very high in the first few years. Maybe a year back the profit was reduced to only 20 crores and later half the provisioning is brought down. So the provisioning doesn't take out the money from the bank, but essentially it's bringing on the equity. So as the impression which I get as an outsider, is it right on the part of the management of the bank to make their appraisals on the cost of the shareholders?
I think it's more of a media creation because as far as provisioning is concerned, so India is a regulator. Reserve Bank tells that how much provisions you have to understand which you are putting. So I think it is a long what you explain the whole thing. But provisioning for accidents. So because of government officials which came very late and Reserve Bank of India gave certain concessions to certain people to amortize those liabilities. And State Bank of India, we already had a financial scheme, so they said no, you have to provide in one book. I think this is some sort of a media creation that whenever a chairman comes, he tries to suppress the profit. There are accounting policies and they are very reputed on forms which audit our accounts. It was, I would say, just a matter of chance that because of salary division, pension liability, there was a huge pension liability which had to be displaced last year in that particular.
So, Toby Robbins once rightly said, by changing nothing, nothing changes. You've illustrated this beautifully through this interaction, and with your thought-provoking insights, I'm sure the aspiring bankers in this audience have got a sense of what to expect in the corporate world. So I would like to end this session by saying that Google is indeed a powerful tool. But replicating a session like this in an online platform is definitely a Herculean task. I thank you once again, sir, for coming to Shillong, taking time off your busy schedule and interacting with our students.